Good evening, good peoples. Okay, let's jump into the weekend prediction on the fund of funds. We'll start with Ymag. We'll cover Ymag, the Magnificent Seven, Ymax, all of the single stock funds, excluding the inverse funds. And then Ulty, as I call her, the wild child. Um, and let's talk just a little bit about how we get these numbers. Um, it's not super difficult. It's several machinations on the share counts and the payouts. A little easier on YMAG because you only have 7 individual components, right? The MAG 7. On YMAX, you have like 31. They don't pay on Ymax for any of the funds until they've had a payout, and then they include them the next time around, um, if that makes a little sense to you. And then strangely, I'll cover it when I get into Ymax. Murney sort of disappeared. They didn't own any shares of Murney where they've always owned shares of Murney. And it actually showed them in the holdings, which is where we get the data, that they had a synthetic on. So a lot of things are changing in their optionality methodology for generating revenue in general, I would say, especially at the single stock funds. Doesn't change a lot otherwise. Um, and I'll go into that more in a little bit. But let's jump in here to my prediction and let's go over a couple of key factors. So, anybody that wants these funds, wants the distributions after you see the estimates, and again, these estimates are going to be pretty accurate. The only caveat is it's a share count thing. So what do I mean by that? What I mean by currently there are 6,125,000 shares outstanding by Ymag. So Ymag itself has 6,125,000 shares. So what does that have to do with anything? Well, it has to do with here's the total payments that Ymag received by owning the Magnificent Seven. So if you go in, you start saying, okay, well, Tesla paid 96.61, right? Apple paid 34.98, Nvidia paid 125.12, and you go through the math on those numbers. Okay, so then you say, okay, well, how many shares of Tesla did they own? Okay, so I take the share count times the payment, and here are in September, right? I'm just contrasting because I've been doing this for 4 months. So here's our September share count for how many shares Ymag owned of the Magnificent Seven. And then, not to confuse you, okay, so you take the share count and then you take care of what the distribution was. Same as you. If you own 1,000 shares of Tesla and it pays 96.61, then you would have gotten 960, $966.10 with 1,000 shares. Well, they're getting a little bit more than that because they own 1.192, right? So their September payment for Tesla is 976,000. You can see who is contributing the most amount of money, right? So Tesla number one, Nvidia, AMZ after that, and part of that has to do with popularity of the funds, right? So 4,058,715 rounded up to $716 is how much they received. So when they have 6,125,000 outstanding shares as of the morning of ex-dividend, which is really at the close of business day on declaration day, right? On the 5th. So that will change, but at that time, it's easy to go out and say, hey, if nobody bought the fund, nobody bought additional shares into Ymag, you would get 66 cents, 0.6626 per share of Ymag. All right. And so again, these dates are key over here. So when is the declaration date for Ymax, Ymax, and Ulty? All three of them correspond to these dates. Tuesday, 9/17. X date, meaning if you don't own Ymag, Ymax, or Ulti, by the end of the close day, sometimes after hour, most of the time after hours counts. But over here, pre-market, everything on 9/18 does not count. You will not get the distribution on 9/19 if you buy any of those fund of funds or Ulti on 9/18. If you buy on 9/17, you will get that distribution. Okay. Conversely, if you already own it and you sell on 9/17, you will lose that distribution. If you sell on 9/18, because in theory it opens up, not in theory, in reality, it opens up in the pre-market minus the distribution amount and then trades however it's going to trade. Now, guys, I got other piece of info. This happens to be right on the FOMC announcement day. This is when Powell gives us his 50-cent, okay, rate cut, which is what I think is going to happen regardless. Okay. I also think we're going down and potentially down hard starting really on 9/9. Now, I think we should bounce for a few weeks. Again, Bruce, what do you know? Well, yeah, what do I know? Just I see a lot of volatility on Monday, 9/9. I've been long the VIX for a while now. I'm up a considerable amount just over the 2 days I've held it, and I expect that to blow up more on Monday and generally be a down day in the indexes, down day in most everything. Obviously, not in the VIX and not in a stock tied to the VIX, and maybe some utilities and some other things with interest rate sensitivity may do okay, but a lot of times things get pulled down in the market. So I just find it kind of interesting. Why am I even telling you that? Because my prediction doesn't show that much shares being added. Okay. Sometimes it does. Some other YouTubers think this thing's going to grow because they're trending it. Well, I try and look at the current trend, not look at the past trend. Okay. So we shall see. But other than that, it's not rocket science, right? Anybody that did this analysis can go out and see that as of the close on 9/5, they would be paying 66.26 cents as a Ymag distribution. Now, we won't get the distribution till early morning on the 17th. So I'll come out and do an additional one, but I have very few shares being bought in. Why? Because I see the market going down. The market going down scares people, and they're hesitant to buy in more shares. Especially, you don't have any magic protection in Ymag. I mean, you're tied to the Nasdaq 100 and to the Mag 7, which are a large component of that, right? So if you see the market pulling back 3, 4, 5%, do you want to rush in and buy? Some people do. They figure it's on sale. And if I'm holding for 5, 10, 15, 20, 25 years, that's a good strategy. If I'm just trading and I'm trying to make money in a down market in the foreseeable shorter term period of time, a month, 2 months, 3 months even, although I do think we get a bounce on the 18th for a week or two, going, oh, okay, but traditionally, when the Fed is this late in pivoting, we typically are already in a recession. So we shall see. Okay. Let me not belabor that. Let me just say, before I get to my prediction over there, it starts out at 66 cents. I got a nominal amount of shares. I'm only going up 400,000 shares, less than, around 8%. Okay, 4/6, maybe even less than 70%, right? 4/6 is 0.666667. If all of you remember from your math, that's 2/3, right? All right. So I'm not going up a lot. I'm only seeing myself going down to 62.20. So that's my prediction, is that they will have added some shares, but not very many, and they will get 0.622. Could even be closer up in the 64, 65. I don't think it'll be 66 because I think it will get somewhat dilutive, okay, by more shares being bought. All right, let's jump into, but these are the key dates, people. So you want to buy if you want to own it, okay, up to 917. All right. And then here's ex dividend. Whoops. So when do you get paid? Well, you get paid on Thursday. You can buy on Tuesday and get paid on Thursday. This this date forward, you no longer get paid if you don't already own it. Okay, this, a lot of people target this as the date to buy because it's dropped the dividend. Of course, you have to wait a full month for the next one. All right, so let's jump into Ymax. A little more machinations, a lot more numbers, but same methodology, right? So Ymax owns all of the single stock funds, but for some reason, there's no share count for Murney, which is, from my opinion, is no love loss, okay, for Murney. Um, so we go through, and the key number here, okay, is the outstanding shares, 14,525,000 shares. All right. And this is how much pay 10.576572. That is the amount of money they collected for all of the shares. So I won't bore you with percentages and weightings and all of that crap. Okay, I'll just get you to the number. So at this share count, okay, by the way, this is down from last month. What does that say? Ymax is declining, because here's my opinion on that. First off, it's still a popular fund within the Ymax family. I think it's fifth of all funds. But honestly, and why? Because it's the only fund that you can get income that's somewhat diversified, right? Why is it diversified? Because it owns every single stock. Now, it doesn't own any inverse funds. It doesn't own dips, fiat, crash, any other, inverse fund. What's an inverse fund? It means it's a bearish fund, right? So NVIDIA, you're long NVIDIA. If you get into dips, DIPS, you're short NVIDIA. Okay, and you make money when on the income side when NVIDIA goes down, right? So fiat is a short of coin. Fiat, I think, was the highest payer this month. Why? Look at Coinbase. It got destroyed. Crypto's been down. Okay. So, and then as Tesla goes down, Crash makes more money. As Tesla goes up, as long as it's not too capped, then Tesla makes money, right? Sorry, when Tesla goes up or goes down, Crash and Tesla, you know, opposites make money. All right, so that's what we have on that front. And then now there's a QQQY, which is a bearish bet. It's not included in Ymax yet, but it likely will be. Well, yeah, I think it will, because it's still a single stock, even though the stock's on an index, right? On the QQQs, but it's a bearish, an inverse fund. Well, I guess it won't be because it's inverse. So hopefully they're getting close. Maybe it'll take 5 for them before they come out the following month and have an inverse fund, right? The way they have Ymag on the Mag 7, at 5 components, they could have a fund of funds for inverse. Bunch of single stocks and then some single indexes. Makes a lot of sense to me. Okay, so where am I going here? So if they distributed today, you would get almost 73 cents, 0.7282, based on the share count at the close of business on 9/5, on declaration date. Okay, we know how much is declared. Okay, now we know how many shares the fund has. As shares get added, right? Then this drops. I only have 500,000 shares as being added. So I'm going with 70 cents. Okay. So now I've given you 2 of the 3 components that you have to consider when you're looking at these distributions. All right. So let's go take a look at Ulty, my final component. And by the way, I think Ulti is like the 6th most popular fund. I really don't understand it because when I go in my summary, I'm going to show you total return. I'm going to show you how much NAV loss, assuming you bought it at $20. Look, guys, I know Ulti's out at 1032 or something. I know some of you bought it at 11, okay? But I'm just going to use 20 as a reference because that's what it opened at, right? That's the initial inception date. That way you can say, I got every distribution. I'm down, 48% on my NAV, and I'm up 37% in my distribution amount. My amount of money is collected on $20. So I got a net loss of 11%. But I'll get into that when we get over there. Now, something in Ulti, notice the absence of the crypto miners. Well, I think that's pretty smart because crypto is being beat up. Okay, they still own some uh, Coinbase and some Misty, right? Or MSTR. Sorry, guys. So easy to flip back and forth on talking about the fund, but you really need to talk about the underlying. All right. So we all know that Ulti mostly is doing covered calls these days. They're buying the shares, writing calls. It'd be interesting to see if they evolve into the spreads and some of the other things. They were doing synthetics originally, but they've been switching and doing more covered calls. But I think they're eligible to do the spreads. All right. So AI, right? This is the AIYY stock. Look at the IV. Now, normally they target around an 80% average on the IV. Why do they do that? Well, if you're going to write covered calls or you're going to use pretty much any of the strategies, a high IV gives you higher yield, right? So if I go out and I buy a 50% yield stock, right, and then I sell a weekly call on it, and I'll get called away if it exceeds that. That's okay. I didn't lose anything. I just guaranteed myself, say, that 1% yield. That's what a 50% or 52% yield is, 1% a week. So I made 1% on my money. Nothing wrong with that. Why can Ulti have all that NAV loss? Because what happens when I buy a stock at, say, $100, I write a covered call and I get $1, okay, then that gives me a 52% yield. As long as I get called out, that's great. But what if I buy it at 100? I write the call for $1, and at the end of the week, the stock is trading at 90. Well, I got my dollar. I got to keep the covered call income. They don't want to take it away at 90 because I wrote a 105 or whatever number I wrote that's a little bit higher than the current market price, because if I get called out, I want to make a little gain there and I want to get my yield. I could write it right at the money and just get my yield, right? But when the stock starts to drop, say it goes to 90, well, I got to write another call. But now if I write 100, which is what I paid for the stock, and last week I got $1, well, at 90 on a weekly, I'm probably only going to get 25 cents, right? And if the stock drops to 85 pretty soon, I can't even generate any income unless I'm willing to take a loss on the stock. So when you get a down market, or the stocks that you bought flip from a bull cycle to a bear cycle, that happens even in an up market. You really have to be a student of Fibonacci, of all kinds of MACD, all kinds of things to really sort of see what's the short term, where is it relative to its 200, its 50-day moving. There's all kinds of technical analysis. And honestly, I don't think these funds look at it, right? They're option traders. They look at a script, they look at percentage. I get it. But sometimes, well, I do, but I think now with crypto declining, I did notice an absence of Mara and all those traditional. But I'll tell you what, I think they're I think they're going to get better on Ulti, but I'm not sure. They've been saying that for a long time. Maybe they're stabilizing it, but until I see that NAV get to 11 or 12 or 13 or 14, then they haven't really fixed it. They've just maybe stopped it from dropping so much. All right, guys. So I'm going to give you a real quick recap, okay, because they've changed out a few. And mainly I'm just going to talk about what industry is that selection and what is that IV. The rest of it doesn't matter. So AI, you all know that, and that fund is probably one of the worst performing funds. That and ARK, right? So ASTS, Space Mobile, right? Global Cellular. Look at that IV. I think there's only a biotech in here that's higher, small biotech. So that in itself can be good, but what's the direction? I'm not looking at the stock chart, but I suspect it's down because they keep owning it. I don't know if they keep buying it and never getting called out and it's dropping, which I suspect is probably happening. Chewy, okay, pet food company. What do? Not a particularly high IV. They need some stable ones if you buy all highs. Calumet, a new company. Okay, high performance grease and lubricants. Interesting, right? Not just auto, probably industrial, right? If I've got a bunch of machinery manufacturing, even robotics, I need this kind of stuff. Okay, then I got Coinbase, crypto exchange. So I had a 95% IV. That's pretty high. So this means this is a high flying company, but that isn't always good either. So there's our Coinbase at 74 in phase. It's kind of a tech energy company. You get these companies that are into solar, they're into wind, even sometimes they're a Bitcoin miner, but they're all about being mining efficient. This is a money market. Samsara, that's new to me. Okay, hardware and software for IoT. Anybody that doesn't know, non-tech person, Internet of Things, right? You get these kind of all kinds of things that can be utilized. So you know how there's store fraud or fraud prevention in a store to keep you from, being a shoplifter. I'm not talking about the cities where people go in and the laws on the books don't even prosecute for shoplifting and they take it. I'm talking about a more normal environment where they do have guards and they're watching for shoplifting. And one of the ways is to put those little electronic tags, and you can't get them off even if you go into the, what do you call it? The try-on room, right? The dressing room where you try on something to see if it fits. You're going to have that annoying tag. And then when you take it up to the cash register, the clerk there removes it. Well, that's for fraud detection. If you walk out the store, there's a sensor saying, "Hey, a piece of our property just left the premises." So it makes it harder for a shoplifter to get. So that's an example of an IoT application. There are thousands of them, people, but just a simple example. So you got Labu, right? The 3X biotech. Now, I don't particularly like what I see here because I see all this Ulty 3X bull. Why don't you own a 3X bear? I own some 3X bear. Why? Because I see this next week and probably going into the rate cut as being bearish. If it's bullish this week and going into the rate cut, then I guarantee you it will be bearish right the day after the rate cut. But I think it's going to be down going into the rate cut. We could get a 2 to 4 week lift up. And then I think the rest of October we're down. Okay. And we probably, it depends on the election outcome, how they see things, maybe January before the markets really stabilize from this down wave that I see. So I just see continued NAV erosion here, to be honest. Um, MSTR, right? 90%. NVIDIA. Look at this IV now. I mean, I think if the markets do what I think, you could see $45 on NVIDIA. That's how low and how hard I think that some of these stocks. Now, it doesn't mean that NVIDIA doesn't go back up to 140 sometime, but wouldn't that would almost replicate, not quite, what Tesla did, or Tesla, sorry, again, confusing the symbol, right? It went from 400 to 100. But I don't think you would see that, but that's about a third, right? 75% is what Tesla went down. And these things happen. It doesn't even have to take that ugly a market. Palantir, love Palantir. I like their owning it, but Palantir is not magically going to go up if the markets go down. Well, they're a generative AI ontology. Unlike, I'll tell you who's in that category: Snowflake, SNOY. But they're second tier to Palantir by far. And Palantir has a very expensive, very comprehensive ontology for a workflow solution. So most of you are relating hardware with NVIDIA, and that's exactly what NVIDIA is, a hardware company. They're a GPU processor building company, okay, hardware. Oh yeah, they got CUDA software that analyzes their hardware and makes it a little more efficient, but they are not a software company, okay? They will make you more productive when you run hardware that can run AI software applications, okay? And Palantir will increase your workflow as a large corporation and analyze everything you do and make it more efficient, okay? Which is referred to as workflow. Very sophisticated, very complicated, but they have the best. Their framework is just amazing. Okay. But that's a long-term growth, but not in a down market, right? But if I had to pick a single AI stock, it would be Palantir. Okay, more QQQs, Cassava Sciences, biotech, 130%, right? So Palantir is about like NVIDIA, 50. Amazing how low these guys have come. But I think if you compare NVIDIA to Palantir, if you looked out 5 years, there's the growth of NVIDIA might be 10%, 20% from its 3 trillion market cap. I think Palantir will be 5x, 8x. It just, NVIDIA is already too big. Now its market cap is coming down at $40. I don't know what it would be, but I imagine it would be only about $1 trillion. And then it could run back up to $100+. All right, so you got Summit, another biotech, 173. That, remember I was telling you? Okay, so you got more of TNA of the small cap. Again, they're bull, right? I do not know why there aren't any bears in here. Um, okay, Upstart, finance, credit, 75%. All right, guys, I don't want to beat you to death with all this stuff. Let me tell you my prediction. Okay. Remember on this one, there's no share count change and all that kind of stuff. They're going to pay what they're going to pay when you get there. Whereas on Ymag and Ymax, they already got their distribution based on how many shares they owned of the underlying funds. But as people buy the fund, then it drops that money amount that can get paid. So that matters. That's why I do a prediction based on how many people I think will buy into the fund, not what it would have paid as of 9/5. Okay. And this, it doesn't really matter. It's more IV oriented, to be honest. So with this one, I'm going with a 73-cent payment. All right, let's jump into the key stuff, peoples. This is prediction time. Remember, a reminder here, you want to buy before 9/17. If you already own, you're going to be paid on 9/19 with no plans to sell. If you want to buy it cheaper, buy on 9/18 on FOMC day. And I have a feeling it's going to be a lot cheaper. All right, let's get over here. This is where the stuff that I want to talk about, okay, doesn't quite fit in the March here. See if I can shrink this anywhere. Not too much. Oh yeah, I can do a little bit. All right, that fits everything in that I wanted to talk about. So here's all their distribution. So what do I have here? Well, let's first go to, this is what, let's start at Ymag, right? I should have my tab that, yeah, it's not set up for that. Okay, so Ymax up here, Ymag here, and Ulty. That's not too hard. You can see the arrows going there. But why do I have two numbers? This is what they would have paid if nobody buys in any different. The 14,525,000, or sorry, this is a different 6,125,000 shares on Ymax. Sorry, I jumped in. I'm doing the middle one. I'm doing Ymax first. Okay. So I'm saying they're going to pay 62.20, 0.622. They would have paid if it's the same as 9.5, which is the 6,125,000, but I gotta go into 6,525,000, and I'll do an update toward the end of next week. So there's your prediction, right? 60, which is up from last month because, guys, all of the funds receive more money, right? We had higher distributions because the market's been up, which is one of the reasons I think it goes down. So let's do all three of these and then I'll go over here. So let's do Ymax, the top number. Okay. Ymax would pay as of Thursday and Friday 72.82. But I'm predicting it's only going to drop to 70. So I got this one dropping around 4 cents on Ymag. Okay. From 66 to 62. I only have this one dropping from 72 to 70. Okay, because I see a downtrend. So back to the Ymax. Why is Ymax seen as more safety? Because it's over 31 single stock funds. And you got a little bit of industry differences, right? Ymag is all NDX, NASDAQ 100. It's MAG 7, right? It's the, 35% of the S&P index practically. Okay, the biggest of the big companies. So Ulty, I have paying 73. I changed my number. Okay, whoops. All right, let me explain because I think this is important, guys. So I go through and I say, what's the average over 7 payments, right? So they've already received 6, and then I'm using the 7th as it's a done deal, even though it's an estimate. And I'm saying, whoops, no, I'm doing the average on the previous. Okay. But over here in distribution, I'm taking the new distribution. So on my average, I've done the average and the median of the prior 6. So, hey, it's above the average and it's above the median. It's right at the average and it's right at the median. It's well below the average and well below the median. Okay. What would the yield be if these three are accurate? If that's exactly what they paid? Okay. 50.27 yield percent on Ymax, a 41% yield on Ymag, and a 8605. Whoops, why isn't that? I changed it down below and not up here. That's why. All right, an 84.88% yield. Okay. Now, here's the critical stuff, right? So with this one, it just is what it is. This reflects the share count purchases, right? This is what it starts at. I think it's going to, now if tons of people, if 20% new shares came in, then this is going to go down to 60, 59, like that. That's why it matters how many people buy into the fund. This, it's pretty much going to pay on its IV. So on this guy, I have a less amount going down. Okay, here's where I think this is valuable. Now, I didn't annualize these, but what I did do was take the distribution amount here and say, okay, that's 7 payments. So Ymax, the first one, has received, if they get 70 cents, $4.60. Ymag, if they get 62.20, will have received 436. And Ulty, if they get 73 cents, will have received $7.40. So in order to do that, it's a simple, assume you bought at 20, okay? You can do this math if you want, if your number's lower. But guess what? If you bought it at $11, you didn't get all these distributions, right? Because it wasn't $11 when it was paying these out. It may have been 11 when it paid August, right? But it just simple math says you didn't get these payouts at that, or sorry, well, I'm talking about Ulti at $11, right? And the same here, they vary a little bit, right? But this one is trending down. You can see where is the NAV right now? Well, I use 9.6 closing price, right? $16.71. So if you bought it at inception for $20, you've lost 16% of your NAV. Now, I know some people hate this. They go, Bruce, you haven't lost it. You still have the asset and you're going to, well, the lower it goes, okay, the less it's going to pay. Now, I get it. If it goes down to $11 and you say I'm still getting, 40 cents, 30 cents, you're right. And you can get all your money back. But I still like to look at this number. So I come up with what's the yield at 460 on 20 for 7 months. Okay. I didn't annualize it. I just said, okay, because that's going to go up at 12 months. This is going to be probably like $7. Okay. And then it gives me a higher yield return. But it is what it is. I didn't want to add all these columns for annualized, but I could. So what is the total return? If you bought it at $20 and have held it at this point, okay, you've lost $16.45 over here, but you've made $23.02 on your $20. So you got a positive $6.57. It's just math. It's this number minus this number. Okay. What about over here? Well, you've gotten $21.82 because you've received $4.36 on $20, and you've only lost 9.2%, right? Because it's at 18.16. So there you go. You've made 12. So you've made more money on Ymag Look at Ulty. You've received, if this is a right number, $7.40. So you've received over $1 a month average over the 7 payment. You've gotten 37% yield on your $20. But you've lost 48.4% of the NAV since you bought it for $20 when at inception. So you've got a negative return. Very few people have a positive return on Ulti. If you just bought it at $10 or $11 and you're getting a distribution, yeah, you're okay. But if it drops to 7 and splits and does all that, okay? So that's why I say assumes you bought it 20 and 7 months of distribution. Okay, guys, that's what I got for you. I think that's long enough. So that explains that I'm going with 62, I'm going with 70, and I'm going with 73 on Ulti. And I'll do an update at the end of the week prior to the declaration on the 17th for the funds. All right, guys, have a great rest of your Sunday night, and happy trading on Monday. All right, bye for now.